Not every company Barron's writes about is a stock pick, and not every stock is a buy or sell. Sometimes there are investing lessons to be learned simply by studying how Wall Street came to value a particular stock. Want to know more about what I mean? Take a look at Peloton Interactive. Outside of a handful of meme stocks, it would be hard to find a company whose stock has had more ups and downs in the past 3 years. Peloton shares are now down nearly 80% from a year ago, and a new CEO is taking charge following a series of setbacks. For investors, the question is whether Peloton stock is a potential turnaround candidate at this point. Peloton is the maker of $2,000 at-home exercise bikes. It was founded 10 years ago with $400,000 in seed money by former Barnes & Noble exec John Foley. The first bike was sold for $1,500 on Kickstarter in 2013. From there, the bikes quickly became a cult favorite among the type of people who wouldn't blink at the hefty price tag. Peloton had its share of detractors, mostly among people who couldn't fathom shelling out so much for a piece of exercise equipment that was certain to become an expensive coat rack. There was even a Twitter account that mocked Peloton's ads, which catered to an urban, moneyed elite. When Peloton came public in 2019, it looked like the naysayers were right. Wall Street had lost patience with unprofitable startups following WeWork's failed IPO. Peloton's regulatory filings showed widening losses as its marketing costs ballooned. And many people laughed at the company's assertion that it had a total addressable market of 67 million households. And few people were excited to invest in a company with two classes of shares that consolidated voting power in the hands of insiders and left ordinary investors with little say in how the company is run.
You'll see next week. Until then.
Peloton shares made their debut in September 2019 and quickly traded below their IPO price. The company became even more of a punchline when an ad launched during the 2019 holiday season was viewed as sexist.
Okay, you ready?
Yes.
Now.
A Peloton?
This holiday, give the gift of Peloton.
Shares fell even further, but 3 months later, the pendulum swung in Peloton's favor, and quickly.
China has identified the cause of the mysterious
A rapidly spreading virus has reached Australia.
This is a rapidly emerging situation.
I think need to be taken at a regional, at a local level.
In March 2020, the world changed. Almost overnight, countries went into lockdown to slow the spread of COVID-19. Gyms closed and people looked for socially distant ways to stay active. Peloton bikes were still pricey, even after some price cuts, but many households were no longer spending on restaurants and vacations, and many suddenly had more cash. Government stimulus also helped to pad wallets. Peloton couldn't make its bikes and treadmills fast enough to satisfy burgeoning demand. It even turned profitable for a few quarters.
There's good financial news for the public.
And even though a return to pre-pandemic routines could threaten Peloton's future growth rate, 2 years of lockdown had made the company's products a habit for many. But once again, the pendulum swung, only this time it wasn't in Peloton's favor. After the shares hit an all-time high in late 2020, they quickly reversed as COVID-19 vaccines became available and demand for bikes waned. The stock took a big hit last November when Peloton reported a drop in average monthly workouts and lowered its fiscal 2022 forecast, which it again lowered in January. Through no fault of its own, the company also faced several PR nightmares. Spoiler alert, the Sex and the City reboot featured Mr. Big dying of a heart attack after riding a Peloton. The company swiftly tried to control the narrative by shooting a commercial with actor Chris Noth soon after the episode aired, but that commercial was pulled after the actor was accused of sexual assault by several women, a charge he has denied. In late January, a rumor spread that Peloton was temporarily halting production of its bikes as demand waned, though Peloton has denied this. In February, Peloton announced that former Spotify CFO Barry McCarthy would become CEO and that the company would lay off 2,800 workers. And an activist investor is pushing for a sale of the company, which is still controlled by insiders, as former CEO Foley remains executive chairman. So, to review, Peloton once traded as high as $170 a share. Now the stock sells for around $32. It's time for Peloton to fix itself, but it might not be time for investors to buy. Less than half of analysts who follow the company are bullish on shares, according to FactSet. But given the company's history and recent changes, There's no denying that Peloton is a company and a stock to watch.